Good morning. Thank you for waiting. We will start in like 5 minutes till attendees join. Thank you. Good morning, and thank you for joining Camco Invest's online investors meeting. This meeting follows our 3-month 2021 financial results, which was announced on Sunday, 9th of May, 2021, and is in line with our ongoing efforts to enhance our transparency with our stakeholders, being it shareholders, bondholders, as well as analysts. I'm Mustafa Zantoud, Director of Marketing and Investor Relations, and joining me today are Mr. Faisal Sarfo, Chief Executive Officer, and Mrs. Hana Taha, Chief Financial Officer. We will be covering a small introduction on the company and the events that took place in 2021 in the first quarter, and then we will go into the business and financial performance of the company, and at the end we will be answering your questions by the management. Should you have any questions to raise, please feel free to share them using the Q&A icon, and we will answer them at the end of the session. Camco Invest is a regional non-banking financial powerhouse. We're an independently managed subsidiary of Camco Group. We adopt the highest standards of corporate governance. We're headquartered in Kuwait with regional offices in UAE and Saudi, as well as a representative office in Turkey. Our business focuses on 3 business sectors, which is asset management, investment banking, as well as brokerage. Today, our AUM stands at around $13.3 billion US dollars. In the latest report issued by Moody's, they ranked us among the top 5 largest asset managers in the region. On top, and in addition, in terms of investment banking, since the establishment of the company in 1998 till date, we have participated in investment banking mandates worth $24.7 billion US dollars. As a company, we're well positioned to better serve our clients through our placement power, mainly focusing on the wealth management, regional footprints and regional markets, the comprehensive offerings that we have, whether we're talking about different products and services or solutions in asset management or brokerage, as well as investment banking, supported by insight and which is through research. We have an excellent track record, and some of our funds goes back to the year 2000. So we have almost 21 years of track record. We have an experienced professional team, as well as a client-driven approach. Before we move, we'll give a quick overview on the market. All markets and businesses are still being impacted by COVID-19, although the vaccination continued to hold the key to future economic growth and resumption of activities. If we look at real GDP, 2020, there was a drop in the GDP as per IMF, and their expectations for 2021 for the GCC is to have a growth of 2.7% for the real GDP. Unfortunately, the lowest expectation was for Kuwait at 0.7%. If we look at the oil prices, we've seen an upward trend during this quarter, which continues the trend that we've seen in Q4 2020. Brent oil was up 22.7% during the first quarter, and we've reached the level of $66.54 US dollars per barrel. If we look at the capital markets, we've seen that global equity markets witnessed mid-single-digit returns during the quarter, supported by the positive returns of mainly the US and Europe. If we look at the emerging markets, the returns were limited, it's around 1.9%, whereas the GCC, it was up 12.7%. In the GCC, in terms of markets, we've seen that Abu Dhabi and Saudi were the highest, or have reported the highest returns during the first quarter of 17.2% and 14%, followed by Kuwait at around 4.1% during that quarter. I'll keep the floor now to Abu Badr to take us through the business and financial performance. Please, Abu Badr.
Thank you, Najib, and good afternoon, everyone. Thank you for attending our session. I'd like to just highlight initially accomplishments during the quarter, during the first 3 months. We're proud and pleased to confirm that we have been continuing to be able to prepare interruption-free services while serving our clients and achieving our businesses. So key highlights I'd like to state. The equity funds and managed portfolios continue to outperform their respective benchmarks. So if we talk about our key 3 funds, Camco Premier Market Index Fund 5.53, Camco Investment Fund 4.99%, and Al Durra Islamic Fund at 7.89%, which puts it as the best performing Sharia compliant fund and the best performing Kuwaiti fund. All 3 here are above the benchmark that was highlighted by Najib a while ago. From the investment product side, we continue to look at different opportunities and different innovative products and services to bring out to the market. Here we mentioned a couple of them: venture capital, leverage, fixed income products, things that we are studying and looking at. Digitization mentioned in a lot of our press releases and our activity, and we are pleased to be reaching a stage where we can also showcase those and basically enhance our client experience in the coming period. We have finalized the testing first phase of our digitization plan, which I just mentioned. We launched iktitab.com, which is an online placement platform for IPOs, private placements. This was actually used in the market and is going to be used in the near future again. During the period as well, an asset in the UK was acquired for 72.3 million British pounds. Our special situations team continues its activity in negotiating exits for clients and presenting new mandates as well. Our IB closed a number of transactions. Here, 3 of those are mentioned. One was a closing of an instrument of 100 million KD subordinated T2 instrument, a rights issue in the market, as well as an acquisition advisory side on the M&A for a 66% share in an unlisted regional insurance company for a client. Our brokerage arm, the third pillar, as was highlighted, asset management, investment banking, and brokerage. Our brokerage arm is Al-Ula Wasata, continues to gain market share, attracting new clients. As we've seen, the markets have been quite positive and the volumes have been increasing. And one of our reports may be highlighted in the press recently that in the last 10 years, this Ramadan has been the highest daily volume average for 10 years. And it's a reflection on the growth in the market activities, especially on the small and medium cap companies. And also the team has successfully completed the MD3 tests for netting, which is a new line of revenue stream for the company, as well as preparations are underway for all the different new instruments that are coming out in the market, between whether it's our asset management team or our Ula Wasata team, looking at all these activities and how we can enhance and improve the product and service range for our client base. Our regional offices continue to strengthen their presence in respective markets. And here, we highlight that our Saudi business has raised the AUM in the first quarter by over 9% and formed a new proprietary investment plan in Saudi Arabia. Not mentioned here also is the IFC team, the IFC branch, which also has been an active participant in what we had raised in the past. The transactions that was mentioned in our annual 2020, and as well as for transactions that we are undertaking. The UAE and Saudi Arabia are active partners with Camco Kuwait, and we're pleased to say that that regional strength is showing more and more as we grow. Very quickly, and I think it was mentioned, when you look at the history from the establishment in 1998 until where we stand today, a couple of landmark highlighted here. There's many, of course, as we know in the market, but we can happily say that standing at an AUM, and when we say AUM, our entire client assets under management with different categories. In the asset management space, we cover a large scope of asset management products, and here we exceed 4 billion KD, $13.3 billion as of end of March. This has, if you look at it from a growth trajectory, a compounded annual growth rate of 13.4 from inception in 98. So on an annual basis, we've been growing double digit to where we are today. Quick highlight, and I think I'll highlight it at a glance before I hand over to my colleague Hana, our CFO. The performance at a glance, of course, profitability stood at 1.55 million in net profit for the first quarter, which is an EPS of 4.52 when compared to quite a negative first quarter in 2020 for different reasons we are all aware of. The cloud that we are still facing is there, the COVID cloud and the slowness of business and closures. We just, as in Kuwait at least, government entities are moving from the 30% to 50, 60, 70% back to work kind of arrangements, which slow down the effect, impacts also the private sector. So there has been an impact on slowness of business, which affected our fee income. On a positive note for the business, the G&A expense has dropped by 31.6% from the quarter of 2020 to 2021. Also, we've been managing our cash position and our liabilities, reducing our liabilities as we move along, and always maintaining reasonable, strong cash position. And this is highlighted there. So in this slide, really very quick, high level, which my colleague Hannah will go into more detail.
Thank you, total income 5.2 million KD compared with 400,000 KD for Q1 2020. Fee income reached 3.4 million compared with 5.5 million KD for Q1 2020. Fees remain the core of our income. It representing 65% of our total income, but the slow of business is still affecting our fee income. Next slide. Our profit 1.5 million compared with loss 4.6 million for Q1 2020. General and administrative expenses reached 3 million compared with 4.3 million. It is dropped by 31.6%. Also, finance cost, it is dropped by 32% to reach almost 500,000 KD. General and administrative expenses to fee income increased from 0.78 times in Q1 2020 to 0.88 in Q1 2021. But we notice here our fee income is still cover all our general and administrative expenses. Next slide. Total assets reach 120 million KD at Q1 2021. From December 20, it was 118.7, so increased by 1.4%. Cash and cash equivalent representing 25.7% of our total assets. Our investments to total assets representing 44.6%. Next slide. Our total liability reached 64 million KD compared with 64.8 at December 2020, reduced by 1.3%. Loans also reduced by 13.1%, and our equity increased by 5% to reach 52.7 million KD. Net debt to equity is 0.29 times compared with 0.3 for 2020 December. Our return earning increased also from 8.1 to 9.6 million, and others from 7.7, which is include reserves and others, to increase to 8.9 million. Our credit rating by Capital Intelligence as of June 2020, BBB for long term and A3 for short term, with a stable outlook. Thank you.
Thank you, Badr and Hannah. Actually, we have a couple of questions that we've received. One of them says, Badr, I think that does to you. Do you have any expansion plans to Europe?
Nothing at the moment. Of course, we're always looking to expand our business. And if we talk about our exposure in Europe, maybe I just mentioned that we've acquired an asset in the UK. So our business model is focused on doing business and providing opportunities and services to our clients in regional and international markets. Our exposure in Europe and the US in general is primarily in our real estate products, which is in excess of $1.3 billion. But operationally speaking, we are strengthening our regional presence at this stage.
Another question, which is why have we seen a drop in the fee income during the quarter?
I mentioned that the effects of closures and the effects of COVID and sentiment and volatility, and if you look at, for example, a chart you presented talking about the oil sector, the prices that we are reaching today are still below the prices we were at just before COVID onset. So we're talking about 5 quarters in which we had a big drop and recoveries that have brought it back to this level. This is on one side. On another side, when we look at the way the fee income is set, we also do have incentive fees, we also do have placement fees, and when business slows down and the markets are impacted, these also get dropped. But one thing I would like to highlight is we have one of the strongest fee income generating businesses in Kuwait, and regionally speaking. And if you look at it, even for the first quarter, almost 2/3 exactly of our entire revenue is from fees and business-related matters, and it's always been at a high level that our business, our assets under management and our investment banking and our brokerage is generating strong fee level generation capabilities. The drops, as I mentioned, due to factors beyond our control and impacts on markets.
Thank you, Badr. There's a question on the expenses. Hannah, please. It's what are the reasons behind the drop in expenses during Q1?
Actually, we managed to rationalize our cost base where general and administrative expenses dropped by 31.6%. Several measures were taken to cope with market conditions due to COVID-19 and the company's strategy post-merger completion.
Okay. Another one on the investment properties. They're asking what's the reason behind the increase of investment properties in the financials?
Investment properties increased from 700,000 KD to about 11.4 million KD. During the period, actually, a property consisting of land and building was transferred from property and equipment to investment properties. And since the majority of that property is being leased to third parties, and all the revaluation from that investment properties, we booked it in the comprehensive income. Thank you.
There's another question on Iqtatib, saying that they need more elaboration on Iqtatib. Can you answer that, Abu Badr?
Yes, I can provide highlights to that. What we've done is we've developed this platform called Iqtatib to allow for investors to be able to access a product, our clients, our investors, whether it is through a public process or a private process, private being specifically for our clients, public being for the entire market. We have a platform that is able to allow for investors to be investing directly through an app, through a website, apologies, through a website, and it's a smooth process whereby they do not need to do anything beyond doing the necessary. Of course, this is all in compliance with regulations and how we act. But Iqtatib, I think in the coming period, we will have more information on it and highlight the capabilities for it. But it will help us and help our clients and investor base to be investing through us in a smoother and better way.
Okay, whether if I may, we encourage everyone to go and register to Iqtatib. It's not only for clients, it's for everyone. You can just register and you will see all the opportunities, whether private placement, as Abu Badr mentioned, or public placements that you need, or rights issues even, that we work on. These will be done or online. Abu Badr, there's one question about cost savings. It says, are there any further cost savings that are expected to be realized as a result of the merger?
I think there is a normalization of cost savings right now as we speak, and there's always a natural attrition as post a merger for cost savings. But I think we have not fully seen the impact. The impact then comes as a combination of cost savings and revenue maintenance, growth, etc. But a significant amount of what was planned has been achieved, most of it. I do not foresee anything to be coming in our current business model that is beyond extraordinary in terms of cost savings.
you, Abu Badr. Do you have any word to close, Abu Badr, before we close?
Yeah, I think, I appreciate that. I think I would just like to reiterate the fact that we are still, there's still a gray cloud above us with COVID and with the situation, whether it is in Kuwait, whether it is regionally, whether it is internationally. And I think another, this cloud will hopefully dissipate as we go back to normalcy. There is, of course, the situation, the regional sometimes problems that happen, and then we have to deal with that from a humanitarian side as well, from impacts the business side. In addition, I think globally we have to be wary in the coming period. I mean, we are cautiously optimistic on the rest of the year. However, we have to keep in mind that there are a number of issues that are impacting international, even regional markets. One of them being the inflationary pressures that we've seen popping up. There's a lot of analysts talking about inflationary pressures and commodities going up in prices, etc. So, we are part of the global world and the regional world, and it impacts us as a major importer of products. Kuwait and the region in general will have some impact if those inflationary pressures get more. So I just wanted really to say that it's still difficult times facing economies and markets moving ahead. And I think as Camco, we're doing our best to have our eyes open, and for our clients and for our shareholders and all our stakeholders, to ensure that we are doing our utmost to look at risk reward profiles on everything that we are doing, whether for the business or for our clients. And with that, I really just want to say thank you for attending this call, and it's part of our initiative really to be as transparent as possible and answer questions. And we are available anytime. We can be contacted. We have our general emails, we have our personal emails, anything that our investors, bondholders, shareholders, more than happy to answer any queries and help clarify any questions that are there. And thank you.
Thank you, Abu Badr. With this, I believe we come to the end of the virtual investors meeting. We thank you all for your participation. Should you have any queries, please visit our investor relations section on our website, camcoinvest.com, where you will see this presentation also posted there, or you can send us an email to our investor relations team on investors@camcoinvest.com. Thank you.
Mm.